evening. It's Quant Trade Edge, and in this video we're looking at Walmart because today was a pretty bearish day early on and Walmart held up really well, and this is why I think that happened. And this was in our homework from yesterday, not even knowing how today was going to turn out. This was in our homework from yesterday to watch because this is a 35-week pattern. So this is a weekly chart, and for 35 weeks we've put in this cup and this handle, and last week we broke out to new highs, and then we just started pulling back to the breakout level. So this is the weekly chart. And again, the way we get asymmetry in our trades is to align a short-term trade. In this case, it's going to be a 5-minute trade. Align that with the daily and the weekly. So this is the weekly part of it. If we come down to the daily, you'll see that we had this impulse up, and then we had this pullback. And I'll take this off here. And really the two things we're looking at is this high here, 106.11, and this previous low of 105.66. And I was also looking at the 8-period exponential moving average for strong moving stocks. That's maybe as far as they pull back. So you can see on this day we didn't get there. None of these days. Here we almost got there but didn't. Today we finally tagged down. And really the low of the day was 105.65. It basically just went 1 penny underneath this low from last Thursday. But none of this is exciting because taking a daily risk requires many, many days of movement to get multiples of your risk. Like in this case, 10 times your risk. Who knows? Maybe this is going to go to $150 in the next 3 months, but that's a long time. So what we were doing was we knew that this was a support zone. We knew that the weekly wind was at our back. And then we were watching a 5-minute chart. So here is that support area drawn in. And if we put an RSI here, or any oscillator really, you can see the divergence. We made a lower low in price and a significantly higher low in this RSI. And the low point on this RSI was 20.41, which is pretty extreme. Ideally, we like to see it under 20, but here it was right at 20. And then this second low is 31.76, much higher. So what that essentially does then is it gives us this bar on which to take the risk. This tiny bar of 17 cents. And I'll remove this just so that you can see me highlight the risk bar. That is all the risk you need to take. Again, like if you want to risk $1,000, that's about 5,000 shares, almost 6,000. And I just went for $1.70. That was just a number I had in my head, but really previous day high would be a reasonable target. And this strength was happening as the S&P and the NASDAQ were falling apart. So that also was very helpful to see that this was bucking the trend. So here, $1.70 up from here is 752. That happened on this spike, I remember. 748 is actually previous day high. So 752 was where we achieved, let me do a rectangle, where we achieved 10 times our risk. And it did go a little bit higher, but then it essentially went sideways the rest of the day. So, again, can you imagine risking $1,000 and in under 2 hours making 10,000? That's the power of the asymmetric strategies that we have. The entries are mechanical. They're either a divergence like this or an ABC like on the prior video with the NASDAQ trade. And I'll link that here, and then we'll have to go back to that video to link this there because this didn't exist when I published that. But these are the types of trades that we look for. And if you want to learn more about this, join our Discord. I'll put a link in the description to the video.